Hey, what's up everybody? This is Evan Carthy from evancarthy.com. Today we're going to go over a post I just did, trend trading, a new and easy way to spot the trend in any market. And so I just want to do a quick video about it because some of the charts I think I can do a little bit better of a description about how I go about drawing my trend lines. So this is from the post right here. This is just the example of how I drew them right there. So I'm gonna go ahead and actually I'll just go over here real quick. What we're looking at right here, there you have the pivot point low, there you have the pivot point high right there, and then you have the retracement. And then in the post I talk about how price has to retrace down to the 38% to make these pivot point low and pivot point high valid. And so it did that, as you can see right here, it hit the 38%. And so this is the kind of 38% retracement low before price went up and hit the 123.6 extension level up here. And so that's when I take the trend line, draw it from the pivot point low to that kind of mid pivot point, the 38% retracement pivot point. I don't really have another good name for it. And so they'll draw that trend line right there. Then all I do is copy it, or copy paste it, move it back over to the top of the pivot point high, and that is the trend line right there. And that's the one from the post I was talking about. As you see, it looked to be a pretty valid trend line. You see how price excuse me, broke out, came back, used it as resistance, came down, kind of bounced off it, and then used it as not really, just two little bars of support, then use it as resistance before it went back down again. So the biggest thing to remember is price has to come back and hit that 38%, because before, when I would looking at doing this and doing other trades and stuff like that, I really didn't take into consideration about having a retracement level needs to come to make it validate that this is a move that is validated by the retracement from it. I would just, if there's any kind of like low retracement, I would just think that was good enough and then draw the trend lines off of that, and it would mess me up a lot. And in the post, to be honest, I don't use trend lines to trade off of. There's times I'll use them, especially for like an overall trend, to see where they are and things like that. But I just want to show it this way, how when I do use it, hopefully it can be beneficial to you. So as you see, I don't have any indicators on my screen at all. There's times I'll use the money flow index indicator, but that's mainly just to see if the stock or future, whatever, is either oversold or overbought. Don't use it to trade off of. And then I have a pivot point indicator as well that just shows the highs and lows of it. Excuse me. But it's also mainly to make sure I'm drawing from the Fibonacci levels from the correct numbers. So we'll just use this pivot point down here and this pivot point right here, but as you see, it's not valid because that came down and broke out of that, so that wouldn't work right there. So what we can do is we can just take it down one more notch right here to that kind of swing low right there. So we use that pivot point high, and see it came down, price came down, hit the 38%, so boom, valid right there. And then price goes up and hits the 123.6. So there we have our valid trend lines right there. So what we do is we go up and we go and we just kind of look for the level where it's going to be a couple different touches for it, because this is a good example of the reason why I want to go over this, because in the video I talk about how sometimes it's going to get kind of messy up in here after price comes down, hits that 38%, because as you can see, there's a lot of waffling around right here before it went up and hit the 38, where it wasn't just like it came down and hit this and then went straight up and hit the 123.6. That's real easy to draw. But sometimes, again, another reason why I mentioned the post, I don't really like excuse me, trend lines too much, is again, they're a little bit subjective based upon the drawer. But I think this way, the way I do use them, it helps take out some of the subjectivity in drawing them. It makes it more of like a robust kind of system or a systematic way of doing them, so they're going to be kind of the same way in the same form, rather than just drawing like, you know, let me get it right here. You can just draw like, oh look, swing high to kind of swing high. Okay, boom, perfect right there. Oh well, yeah, kind of worked. Nah, that really didn't work. Okay, well then let me just go. Yeah, let's just use this one right here. You know, there's a swing low to swing low. Perfect, bam. Oh man, no, that really didn't work at all. So obviously trend lines don't work forever, but I think this gives a better overall picture than just trying to connect them from like swing high to swing high and swing low to swing low. So after I draw that, I'm gonna go highlight there's the pivot point low we were talking about right there. There's the pivot point high right there. And then here is what we're going to call kind of like the swing 38% low right there. What I did was I just used it where there's kind of a lot of touches for it as it went through it, and so we're going to call that the trend line for it. So here I just copy it, paste it, highlight it, move it over here to the top, and there we have the trend channel for it. So if we zoom out a little bit more for it, we can kind of see what it looks like right there. And again, no trend channel is obviously perfect, but I think that gives us a pretty good idea, and it's pretty accurate for what we're looking at right here. See, price came out and broke it at the other upside of the trend channel, came back, broken at the lower side, looks like it's getting ready to fail, but then broke up close to the top, never hit the top, and then came and broke out. One thing I'd like to point out, kind of like a little bonus for watching this video, is that when you do draw your trend channels and you see a break out of one side of it, typically when that happens, be prepared for a break to come down to the other side of the trend channel. Not saying it happens all the time, but just be aware that when there's a break upside, like say if it's long right there, then be prepared when it comes down, that's going to break out to the downside right there. It's just one thing I've noticed, especially with trend channels, when price does come and break out of them. So that's that. Let me show you I'm going to show you short, because what all I've been showing you is long. So, I mean, we just do this one right here. All right. So what we'll do is we'll use that pivot point high, that pivot point low. This is going to be a little bit of a shorter chart right here. But so let me highlight it for you. There's the pivot point high. There is the pivot point low. And then price comes back up, retraces at 38, comes down, hit the 127. So there we go. That is a valid pivot point. Go down, make that right about there. Copy, paste it, move it up to the top up here. There's the 38% level right there. And then there we go. Here we have the trend line down here to the downside. So that would hit down there. Bam, bam, move it up right there. You see how it came, broke out the top of the trend channel right there. And then what I just said a second ago about when price breaks out of the trend channel one way, when it goes back the opposite way, look for it to break out to the other side, and look what happens. Breaks that down to the other side as well. Comes back up, use it pretty perfect as resistance level, and then comes and breaks down here to the downside before it just kind of goes out together all again on the outside, and then finally breaks out to the other side for it. If you really want to get crazy with it, I mean, I've seen some people do this, and I used to do this too when I was going through max price action trading. When I was big into that, is like using that as like the midline, and then kind of bringing it down here again. So you have like, you know, now would be like the mid trend channel. I don't really do that anymore, well, because I really don't use trend channels too much, so I don't use them at all to train off of. But it's just something I know if you ever go watch max price action trading videos, which I've done a couple posts on, I do like his stuff. I think it's very good, especially learning how to a new way to trade without really using indicators. You know, it's cheap. He's got tons of YouTube videos. Just go to YouTube, max price action trading, and you can see how he trades, and the way he draws the lines and everything. To be honest, I don't really like it. That's another reason why I just consider trend lines to be pretty subjective. Because if you look at his chart, you'll see there's tons of lines drawn up all over it, and so it's just not something. You know, it didn't work for me. You know, it works for him, perfect, awesome, that's great. I'll never knock anyone if something works for him, but I just don't like it because it doesn't work for me. So we'll do one more to the downside right here. We did to the upside, and I want to show another one here to the downside, just a little bit different level right there. It's pivot point high. There we have the pivot point low, and there's price coming down here, breaking that right there. So let's go take that. You know what, I think for the last one I actually did reverse because I took that, but you know what, that was right. This is not right here. No, I'm sorry, the last one was in reverse for it. So there we have that, and then move that down there. But no, this is actually reverse. I just totally screwed that one up, but that's all right. Still kind of works. It still kind of works the same way, depending on what you're doing for it right there. So there we have the top. There we have bottom, and see price kind of broke out down there, and then breaking out to the upside up there. So that's just another way of drawing them. I'll just do, let's see if we can get one more up here. Here's one before that one really broke out to the downside. Actually, that one will work right there. It's a little more shallower. So what we do, take the bottom to bottom right there, and then move it up to the top right there, and there we go. It comes to the bottom, breaks out to the top, then look at that, breaks out to the bottom a little bit right there. It moves off of, and then hits out the top right there, and then bam, that before it just totally collapsed right there. So that's obviously some Google had some bad earnings or something right there. Yeah, definitely the E down there, bad earnings report right there. But anyways, that's how I draw my trend channels. There's a pivot point low, pivot point high, price comes down, hits the 38%, and then you draw the trend channel from the bottom to the bottom of the 38, move over to the top, and that is about it. So it's not going to be perfect every time, but I do think it does provide kind of like a structured system for trading, and that's basically what I'm looking to do, trying to make it as easy as possible, and go from there. All right, hope that helped, and if you want to see anything else, just let me know. Thanks, bye.